One thing I wanted to add, so we've talked a lot about organic growth. Another way to kind of grow your business is through acquisition. And I think that's a really big deal of kind of what banks help with, and equity as well. But one of the biggest things looking there is how do you envision that you're going to run that business you're buying? You own one today, but how are you going to run that one that you bought? Because one of the things I hear borrowers say all the time is, well, why do you want to buy that business? Oh, it's really profitable. It's making a whole bunch of money. Well, it is today. It is because that person's running it. It is because that team's running it. How are you going to run it to then continue? If it's not part of your passion and it's not a part of something that you can see yourself building and growing, why are you buying it? Because that's gonna dry up. So just because it's successful now doesn't mean it's going to. So seeing your vision in that. So going to the business plan, as we mentioned earlier, that business plan of how are you not only going to run your current business and make it successful, but also buy that next one, that next business, and make it successful as well. That way, and you don't necessarily want to buy a job. You want to buy something that can grow with you for, as an investment down the road as well.
A couple of things lenders look at, I mentioned, that we're kind of cut and dried. We look at cash flow. So back to the acquisition, what is the historical cash flow that's been generated? And then when it gets to the business plan, that's where it's really key, because you're talking about projections. And projections are only as good as the assumptions, and that's one thing that, having been a mentor for companies, a lot of people forget about those assumptions, and I would really focus that, because that is what drives your projections. That's the numbers behind the numbers. And I guess the last two things is make sure you got your equity lined up, and we talked about credit scores. We need to make sure you got a good credit score.
Awesome. What are some common pitfalls that you see when people are applying for loans, or people are looking for, maybe just specifically for loans now, we'll talk a little bit about equity later, but just for loans, what are some pitfalls that you see?
Quality of the information you're providing. That's the most important thing. If you can't provide a quality financial statement, or even your checking account statements at a bare minimum, you're not going to go very far in the process. We don't have anything to look at that point. As much as we want to bet on your future, we also have to see what your proven track record is with the business. And to do that, the best way to do that is your historical financials. Now, knowing how to do that may be something that, there's going to be wide-ranging experiences here in the room, but there's resources out there. I'll let Ray in a minute talk about more of the SBDCs that are out there and kind of how that space works, and some of the resources that are out there to help some of the small business owners put some of those things together. But you have to be prepared to go get your lending. You have to be prepared, even if it's an equity play. You have to be prepared to show them what they're helping you with, and that's one of the biggest things is just quality financials and quality information.
So we talked about technical, advisory type services. So there's groups here in town, small business development centers are part of SBA. There is SCORE, there is, CDFIs, community development financial institutions. They have technical advisory. So it gets back to what Jimmy mentioned, be prepared. Unfortunately, lenders are very busy. And so the more prepared and the faster you get information to folks, it changes the conversation completely. That it gives you a lot of creds, that you know what you're doing, because the way you handle that process is sort of a reflection on how you're going to manage the business.